for true sat dollar parity, or for the dollar to become worthless, or for hyper-Bitcoinization, I was talking with Luke Broyles about it earlier today. I kind of think it's probably something between 2030 and 2038. It's just a guess on kind of looking at the cycles and the timing and how things are getting shorter, the contractions are getting stronger and more closely together. The way I get to the 2020, 30 to 2038 timeframe is I use kind of the model that Howe and Strauss developed with the fourth turning. I date the beginning of this fourth turning to 2008. And fourth turnings have lasted from maybe as short as 7 to 10 years in the Civil War to more likely they're kind of 15, 20, perhaps even as long as 30 years. So if you kind of assume that, so we're not at 2028 will be 20 years. 2038 will be 30 years. I think this monetary system is dead before 2038, way before 2038.
Lawrence Lepard is a sound money advocate, Bitcoin enthusiast, and investment manager with Equity Management Associates. As a gold stock fund manager and sound money advocate, Lepard has spent decades advising investors to avoid the constant debasement of fiat currencies by investing in gold. However, with the creation of Bitcoin, Lepard's task has become easier, as the leading cryptocurrency offers a better alternative, digital gold, providing adequate protection from fiat debasement along with many other important qualities not found in gold. During a recent interview with GoldRepublic, Lepard gave an ultra-bullish price prediction for Bitcoin, stating that the leading cryptocurrency will someday be worth millions of dollars per coin. This prediction is not just a result of constant fiat debasement, but also growing concerns that the situation will worsen in the coming years. In his discussion with Alexei Jordanov, Lepard provided a highly optimistic 2028 to 2038 timeframe for the complete collapse of the financial system and the move toward a global Bitcoin standard. He predicts this impending event using the Strauss-Howe generational theory to determine when the cycle began and when it is most likely to end. Lepard explains that the near collapse of the financial system in 2008 ushered in a new cycle, which is progressing rapidly if the world's $315 trillion debt load is any indication. He forecasts that in the next few years, the world will move from inflation to hyperinflation and finally to hyper-BITCOINIZATION, the moment when Bitcoin surpasses traditional forms of money and becomes the principal currency in most, if not all, countries. We will bring you clips from Lepard's interview with GoldRepublic, where the investment manager discusses the state of the US and global economies, Bitcoin, and the move toward a global Bitcoin standard.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Yeah, well, the dollar's worthless, frank's all currency is worthless, and we're on a Bitcoin standard. That's kind of what I think is going to happen.
That's soon, okay.
Yeah, that's soon, yeah. But like I said, I've been early and wrong plenty, so be prepared to have me be early and wrong again.
I'll put you in 14 years.
Yeah, again. Well, and I will tell you there are two possible ways they get out of it. Well, there are three maybe. One is they do kind of the playbook we ran after World War II, which is they run really high inflation until they can get the sovereign debt, size down to a place at which they can reestablish control of the monetary system. So they quote unquote kind of save it. It's like a Volcker, but over 7 or 8 years, right? And Israel did something similar when they had a problem like this. The other thing would be they do a one-time monetary reset, like what Roosevelt did, right? And he grabbed the gold, revalued it, devalued the dollar in terms of gold 70%, overnight. The government, somebody intelligent in the government could realize, hey, this monetary system is failing, we got to fix it. And therefore, we're going to do a 10-for-1 split on the dollar. And old dollars are worth 10, new dollars are 1. New dollar is backed by gold, oil, basket of currencies, whatever it is, but it's backed by something that can't be printed, so it's sound. The alternative is the whole thing fails. Do you know what I mean? I mean, the alternative...
It's like Mad Max.
Yeah, well, it won't be Mad Max, but it'll be, for a very brief period of time, there'll be a lot of chaos, there'll be a lot of hyperinflation. I mean, I think, we could get to a stage where, you see, Bitcoin at a much, much higher price, and you see a dollar at a much lower price, certainly in Bitcoin terms, same difference. And, they're parallel, but eventually it goes back to what I said in the earlier part of the interview, which is to say that when the consensus of the people realize that the dollar is shit, that there's just no point, I mean, it's good for transacting, but nothing else, they're going to do what the people in Weimar Germany did in 1922. The minute they get a hold of a dollar, they're going to convert it. Nobody wants to hold it. It's like a hot potato, right? They just want to get out of it, get out of it, get out of it. It's called Gresham's Law. You're getting rid of the currency that will lose its purchasing power, and you're buying a currency that will hold or increase its purchasing power. And so that process will accelerate, and just as in the Silicon Valley Bank instance, everybody at once suddenly said, holy shit, this bank is bankrupt, I got to get my money out of there. It can happen fast. It could happen really, really fast. Don't discount the possibility that it could happen, quickly and before 2030, because, we're all so connected with the internet and social media. When you get to the point where the entire country knows the currency is a joke, and it's becoming worthless, it becomes self-fulfilling. Because the currency really is the medium of exchange that we all trust in transacting with each other, but also, at least over a medium-term time frame, it should retain its value. I mean, it can, and as we've proven, it can debase 7% a year for long periods of time and still survive. But when it starts debasing, when you start debasing 10% a month, I mean, hyperinflation is defined as 50% a month. And we've had 100 plus hyperinflations in history, in the last 200 years. And, we're kind of having a mild one right now in Turkey. They had a very severe one in Venezuela where their currency became worthless. We've had plenty of other examples. I mean, Hungary. I mean, you just go through it. Zimbabwe, there are many of them, and they all seem to exhibit the same characteristics, which is the currency starts slowly, and then it gets more rapid. The swings get wider, it gets more rapid, and then pretty soon everybody's like, "Oh, this is screw this, I'm out of here. I'm not holding this anymore." And it kind of becomes stunning. I mean, if you look at, I can't remember. I was looking at the math. I think it was on Turkey on what people were buying and the way things cost, and things in Turkish, they use the franc. I think it's a Turkish franc, isn't it?
Turkish lira.
Lira. I'm sorry. Yeah, in the Turkish lira, I mean, things are cost like 200 times more today than they cost a few years ago.
Concerns about the U.S. economy have escalated from minor issues to major crises. While speaking at AllianceBernstein's Strategic Decisions Conference on Thursday, J.P. Morgan CEO Jamie Dimon issued a stark warning about the U.S. economy, predicting that unchecked government spending will result in stagflation, the dreaded combination of high inflation, high unemployment, and low growth. Given the extraordinary amount of fiscal and monetary stimulus over the last 5 years, Dimon said, "How can you tell me it won't lead to stagflation? It might not, but I, for one, am quite prepared for it." The J.P. Morgan CEO issued similar warnings while addressing reporters at his firm's annual global summit in Shanghai, expressing concerns that the inflation problem is much worse than the Federal Reserve is acknowledging. He stated, "I think inflation is stickier than people think. I think the odds are higher than others believe, mostly because the huge amount of fiscal and monetary stimulus is still in the system and may still be driving some of this liquidity. I look at the range of outcomes, and the worst outcome for all of us is what you call stagflation, higher rates and recession." Now let's return to Lepard's video as he discusses further about Bitcoin, Wall Street, and the financialization of cryptocurrencies.
So obviously some of them are just there, hey, look, we can get 20 bips on trillions of dollars, let's go do it. I think some of them kind of get it and understand it. I think a lot of them are going to make the classic mistake that actually one of my friends, a wealthy guy who I was speaking to recently, said, "I don't know, man." I was talking about it was 50,000. I don't know, man. My average cost much lower. He said, God, you told me about it at 25. I should have bought it then. It's up 100%. How can I buy it? And I was like, dude, you don't get it, okay? I mean, if it's $1 million, does it matter if you paid 50 or 25? Obviously it matters, you got twice as much, but the point is, it's going so much higher. And so I think a lot of Wall Streeters are gonna make the classic mistake of selling it when it's up 200%. Do you know what I mean? A lot of people are gonna make that mistake, in my view, because they don't really deeply understand what they hold. And they don't really deeply understand just how far this thing can go. And so, I mean, that's fine. That's their prerogative. But, it takes, as you know, because you've been in this for a while and you've studied it takes a while to fully, deeply understand just how fundamental this thing is and how much it's going to continue to go up for a long, long time. Sales is going up forever, Laura. I mean, I agree with him. And, I mean, I'll give you my perfect example. I've used plenty of examples. I bought Microsoft coming public in, 1984, right? 85 when it came public, right? I made 3 times my money. I needed to buy a condominium. I sold it, right? That was a mistake, right? Because it was the base layer of the software technology of the PC. Now ultimately Apple came along and everything else. But the point is, I left and I felt great. I made 300% or doing, a couple times my money, right? When you get something fundamental that is a change that's going to take place over a period of years and decades, you don't sell it. You just don't sell it. It's like a sailor used the example of Manhattan real estate. I mean, it's the leading commerce center in the United States. I mean, if you came in 1700 you feel like the Dutch who arrived in 1640 got a good deal because you maybe paid 10x. But if you came in 1800, you feel like the settlers, the Brits who came in the 1700s got a good deal because you paid 10x them. But guess what? At every single level, buying a fixed supply of Manhattan real estate has worked. Now it goes down, and the city was, there's a crisis. The city's a mess in 74. You got needles on the streets, all kinds of tax revolt, et cetera. You could pick up a skyscraper for, pennies on the dollar, and some very smart guys did, and they're very wealthy today. But it is an asset that, because of its limited supply, will continually grow in value. Having said all of that, you also need to live. And, being a rich millionaire, billionaire, whatever it might be, in my view, is short-sighted as well. Such that, I know people, and maybe one of them who at $1 million a coin might say, well, I need to lighten up a little bit here. I want to take a vacation, or, I don't know what a vacation will cost then. But it's also a little bit of the be careful what you wish for, because, we could have $10 billion or $10 million Bitcoin, but in the same environment, we could also have $100 gasoline, right? It's like part of what's the monetary debasement that's taking place, that's driving what the Bitcoin adoption is also driving higher nominal prices. Wall Street, in my opinion, will be slow to figure it out. And it's funny, it's almost the perfect tool because, you need to be kind of humble, I think, to accept it for what it is and to recognize that, you don't know it all. I was quite skeptical of it in the beginning. Saylor was skeptical of it in 2013. He didn't believe in it. He said so. I think
with that book, right?
Yeah.
Why?
I don't know. I'm not familiar with that, but I know he had some tweets that said he thought he didn't believe. And I think the average Wall Streeter thinks they're smarter than the average person. They tend to be relatively arrogant. They tend to be relatively rich. The system has rewarded them and told them that they're smart and successful. And that's why it's going to be such a disruption to their worldview, as this thing, just totally demonetizes everything.
Like many investors who have thoroughly studied Bitcoin, Larry is extremely bullish on the leading crypto asset both in the short and long term. With massive demand from ETFs, Larry predicts significant price increases for Bitcoin in this cycle. He is even more optimistic about the long term, believing that the eventual collapse of the current monetary system could push Bitcoin prices to millions of dollars per coin. What are your thoughts on Larry's interview and his super bullish predictions for Bitcoin? Please share your comments and observations in the section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.